here we are with ticker symbol Srne, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow, and to all my subscribers, welcome back. And let's jump into this chart. So Sorrento was having a nice recovery as it hit those lows of about $5 and some change after hitting the highs of $20. It went up and went down. There was a lot of uncertainty. You could actually see it in the charts. There was a lot of uncertainty until after, obviously, the 29th of September. And then it kind of leveled off a little bit above and starting to work its way up. So every time it hit a new high, it fell down, then it went up, and then it fell down, and then it went up. And now is where you saw it kind of level off. But quickly after this leveling off, lasting for a couple of weeks, literally almost 2 weeks, it is now on a downward trend. So it's very interesting to see what has been going on and what the behavior has been from that recovery till where we're at now. So there's some important numbers to look at here on this recovery I want us to pay close attention to. The lowest point reached was 855 in this whole entire bullish run after hitting the highs of $11 and some change, and then the ups and downs and the uncertainty you can see here until it actually started to level off. And then it looked like, whoa, we're going into a bullish trend here. This is actually going to hit newer highs, and then quickly it has actually went in this direction. So we need to keep in mind that lowest point, and we're pretty close to it. We're not that far from it. We're a couple cents away. So if it breaks through 855, this could be well on its way to newer lows, and we'll have to monitor this one closely and see what's going on. And I can't believe that this actually jumped back to Apple, excuse me for that, but we're back here in Srne. So super important to keep that in mind, that 855 mark. And again, as we were looking at the graph, I hope that that Apple jump didn't confuse anyone. It was actually just, it switched screens, but we're back here. I've been talking about this graph the whole time, but it's super important to keep that in mind. Keep in mind 855 and the things that I've pointed out, how it went up and went down, went up and went down and went up, and then it went in sideways direction. And from this point here, which was $10.13, there was some momentum being built and it looked like it was going up. And as I stated earlier, from this point forward, it's just been going down. Now it's broken through some of these supports that are important, but it has not broken through the lowest point within that 1 month time frame, which is 855. And like I said, we're getting real close to it. So let's look at what's important for tomorrow and keep in mind that number 855. Write it down to pay close attention for the next coming days and weeks. So this is going to be a narrow stretch, and we're going to talk about our resistance level and supports a little bit broader. So our support is that 855 mark as a broader number and spectrum of what we're looking at right now. And then the highest point before this run fell is right here at 965. I would write that down. If that gets broken through, that means that two resistance levels have been broken through and we should be back into bullish territory. But before breaking through that number and even looking at that, we would have to look at the 50-day moving average. The 50-day moving average is 962. Super important number right now, because that lets us know on what side of the chart we're in, and we're currently in bearish territory and we need to break through it to be in bullish territory. So keep that in mind. But before getting to any of those numbers, obviously the bulls need to break through the first resistance level. That's the highest point in this leveling off and before this continue to hit newer lows, and that is 920. The bulls need to break through 920, turn that into a support, and start to break away to hit newer highs and newer resistance levels. 920 is an important number for the bulls. Now, this does not signify that the bulls have gained control. Again, they need to break through 962 to break away and get into bullish territory. So 920 is important to give us a sense of direction as investors where this is heading, but it does not signify that the bulls have gained control. But the first resistance level that they need to break through to start to work their way up is breaking through 920. On the other hand, we have what the bears want, and the bears want to break through support. This is actually leveled off right now at 893, and the bulls actually want to tear this one down. I mean, they're trying their best to work their way down to 855 and even go further. So they've been doing a great job at actually keeping this below the 50-day moving average, and that's their goal as well. So 888 is our support level here, and the bears have really torn this down. I mean, this was a very bearish run here that happened and began the catalyst for this to start to work its way down. And 888 is so important to keep in mind. I want to emphasize to all investors, pay very close attention to how the stock is reacting if it breaks through 888, and how quickly is it hitting newer lows, and how quickly is it moving further away from the 50-day moving average. Are the bulls even trying to reappear to recover this, or are the bears dominating the charts? As always, I hope that you found this video helpful and informative. If you did, please do so and subscribe. Don't forget to share this with your friends and community. And also, if you click on the subscribe button, or if you're a subscriber and you haven't already clicked, just double check and click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. And also, don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I've circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.